All right. Um, let's get started on our uh, Sunday stock talk, followed on this MLK Day. Um, Many things to really look forward into the stock market this upcoming week. Um, Now, the way these works is for you members. We will have our news. Talk about some of the stocks that I'm watching this week. Um, And then we've kind of spoke a little bit about specs, kind of talk about what a spec is, um, ways that you can trade them, especially with warrants. I think warrants are going to provide with a good risk reward as we enter positions and exit them. They're very similar to options, and I'll explain a little bit how they differ. Um, and then we're going to talk about some spreads. So a lot of useful information out of this today's meeting. Account management. I'm looking at my notes here, but I'm excited to get started. First thing I kind of want to touch bases on is on the importance of um, my risk reward. And that's going to vary for every person. Now, some people have account sizes where they can't risk a $8 contract to make $15, for that contract. Um, some people feel more confident with maybe trading 50 cents contracts and trying to make them to 75 cents. For me, essentially, ideally, I would like to enter a position if it's worth three. I'd like to, make double my money, and that's from like 3 to 6. But I'm okay risking three to make, 4.5 a contract, or 1.5 essentially. So 50%. Um, and that's going to change for person to person, and it's the same thing in stock trading. For example, we had Anthony coming into the group chat once, and he came in and discussed that there's some stocks that he traded all the way up to, for example, Melly. He traded it from like 800, now 1600, stocks at 1700, 1800. He prefers now. He said he likes to trade stocks. What has the better chance for going from 10 to 20 or 200 to 400? And it kind of woke me up, woke some other people up that, well, what am I risking for my reward? Especially also, you got to take the exception of time. Um, if you're okay with entering a position and it taking a year for you to get double your money back, that's okay. It's not my job to tell you versus somebody else if what the opportunity cost that you're putting in is okay for you, and that's something that you need to figure out. For me, a lot of people know that I'm an aggressive investor. I like to get in, um, double my money in whatever position and get out, and then look for the next trade. Um, Warren Buffett, people like that, they were investors, long-term investments. Now, something that if you are going to be a long-term investor, you have to be a little bit more susceptible to pullbacks. I'm, for example, myself, I'm very paranoid to pullbacks. Um, but and that's just because of the investment, the opportunity cost that I'm willing to throw out there. Um, Especially with contracts, if you're trading options, you got to be careful about that, not being too paranoid depending on the time that you're given. For like leaps, um, I there's some pullbacks where you got to be okay with. That's just the cycle of the market. Um, Myself, I worked as a financial advisor for a little bit. And one of the things that we stress to new members that is like that the market follows this cycle where they are pullbacks. And essentially, if you're a long-term investors for the next 40 years, you're going to see 3 to 4 pullbacks. Um, Now that's something that you got to be okay with, accepting the opportunity costs that you selected. where you want to make this much money in this much time, well, this is the risk that you're going to have to take. Now we have seen that every time that the market pulls back, we've seen new highs followed up. Now some highs aren't necessarily the V-shaped recoveries that we've had, but it's understanding how much time you're willing to put in for you to make whatever X amount of money you want to make back. And that's something that before you start investing, that you need to probably write down on a piece of paper, like I have mine written down, and that you've got to stick to. And that plan will sometimes change as new circumstances in life. You can't wait 40 years for you to get your money back, or you need to double your money. You're going to have to change your opportunity cost and your risk reward. So that's something really big that I want people to understand. Something about the room that we're in, so we have many different investors, traders that are willing to risk, different size contracts, different size stocks to get different rewards back. So no account is exactly the same. That's something that I really want to throw out there before we really dive into this, especially with the warrants and the spreads that I'm about to discuss. So I thought I should throw that out there. Okay. Some news over the weekend, as you see here, sharing my screen. We do have the inauguration coming up, January 20th. Now, some things that I expect to happen, as it says here, is that we are having a immediately President-elect Biden says that he's going to jump into the 4 crises facing the country. These here are the COVID-19, the economic downturn, the racial injustice, and the climate change. What does this mean for the market? Okay, so the COVID-19. Over the weekend, you may have saw that Pfizer has been releasing news. The stock actually fell quite a bit in the European markets, and that's simply because they're cutting back on the deliveries. I don't know if this is a manufacturer issue where they don't have as many vaccines as projected. Now, that's probably what I'm assuming it is. It would make sense as this is a crisis. And there's also been reports of the meds not working where people have been dying after taking these medicines. Now, something that the media has hid is that the medicines haven't been working because, one, these patients were in hospice care, meaning, one, they weren't doing really well. Two, they're pretty old. And we've known that coronavirus is especially, affects the older generation a little bit tougher than for someone like my age. We don't know if this is because of the vaccine where that you're getting a little bit of the virus put in you, if the older generation is not reacting very well to it. So that's something to watch out for the coming, couple months. I've yet to see anything with Moderna come out with like the similar headlines. So watching the vaccine stocks, I expect actually Moderna to actually open up pretty strong based off of these Pfizer news. Once again, I don't personally play vaccine stocks, and that's just because I don't do well trading them. I feel like they're very news driven and they're sell the news events. And it's kind of hard to trade because most of the news that comes out with them happens over the weekend. So I can't enter a position, for example, and then it fades throughout the day. So one circumstance when I think it would do well, it doesn't do as well as I would expect. Biden, economic downturn, I'm assuming stimulus bill talks. Now we know that we do have a stimulus bill coming. I believe it's 900 billion. Don't quote me on that. That's how much they're ready to sign right now. Heard talks of $1,400. So last time we got a stimulus bill, the market reacted very good. But over the last week, we saw that whenever they talked about the not being $2,000 being at $1,400, we saw a little bit of sell-off. Be interesting to see once the bill's actually signed, how this is going to play in fact into the stocks. I expect if the market's going to behave well, I expect the value stocks to actually be leading during that news headline. Now we have a racial injustice. Unfortunately, I don't feel as this ties too much to the market, but it is good that we are seeing some of that being broken, especially on a day like today. And then climate change. You guys haven't heard me talk about how bullish I am on energy. So ever since plug, fuel cell, TAN, EVs, NEO, those names have been soaring. We've been kind of riding the coattails of that. I expect that to continue, especially just because we should see more bills being signed in order to help that. One of the big things that Biden said that he was going to change was the climate change, because he believes that climate change does need to happen in order for the human race to survive. I believe down here it says he is going to sign Wednesday rejoining the Paris Climate Change Agreement and reversing President Donald Trump's travel ban. So those kind of basically two things. The travel ban is going to play more in order for the bookings, Expedia, but it's going to be really interesting to see what the circumstances are with that, with the virus. If the virus news gets worse with the medicine, will there be another travel ban? I also saw that President Trump says that he's going to lift a lot of European travel bans. Now, do we catch, example, a third wave coming in, especially from cross-contaminating countries, if you will? And that's kind of another thing that I think that maybe the Pfizer news wasn't working, because we haven't really had that bad of a news in the US. So I wonder if it was just a weird breakout in the UK where the medicine, maybe there was some sort of cross-contamination where it wasn't reacting the way it should have. Something really interesting to watch. And then we will probably be keeping a close eye on Chinese stocks, PDD, Baba, Baidu. And that's just because we're expecting the taxing of the US companies to increase. And actually in my notes here, I have that this is good for SPACs, and I'll describe that in just a little bit. But as we know that that Biden does plan on raising taxes on these companies, will larger companies move into countries like China? Something really like Baba and PDD, will those companies migrate over to China? Similar to Baba and PDD. That's what I should say. I'm sorry. So watching for that. And that's about all I have for weekend market news relating to the overall effect of the entire market. Some stocks that I'm actually going to watch this week. I posted a big watch list on my Twitter, but to simplify it, we do have Celsius, which I expect Celsius to actually report really good numbers whenever they do. I've seen a lot more people using it on the FinTwit. That could be, because of the Pounding the Table guys really pushing that out there. And I've also heard good reports that their drinks are actually really good. That's because, that's not why because, but I have personally not tried them. I'm not big into energy drinks. I'm actually just now starting to drink more water. I used to be a carbonation fanatic, but not anymore. But we do have 70s for Celsius. Those are actually paying off quite well, pretty nicely. We did get a good breakout of 60. I'm looking for a little bit for us to have another possible squeeze under the 70 level. As you see here at 60, we did have 2 or 3 days, 4 days of consolidation right under, and then followed with a big breakthrough. We entered really close to these 2 days. Back around 45, we had a big consolidation, which 5s and 10s are more or less really good psychological numbers. for entries. Next, I have I have FGNA, which is a SPAC, which I will talk about in just a second. And like I said, I'll speak about that in a second. Melly is actually at all-time highs, which it seems about every week that it breaks all-time highs. But I think that there's a 2000 magnet coming here. Let me pull up the weekly here. This is still daily. Weekly, almost a beautiful just breakout out of that 1730 area. I'd like to see this stay above 1850, but I may throw out 2000 lottos expiring on Friday. They'll be around $4. I think that this has a 2000 magnet coming. Last weekly breakout was really strong. Something to watch out for though, looking at the chart on the weekly, it seems like if we do have a big day like this or a big week like this, we are susceptible to some pullbacks. For example, here would have been an all-time high breakthrough and then pullback. Long-term doesn't really affect the stock too much, but just something to note. I mean, here was a big all-time high breakthrough, and then the next day we basically had a dud before continuation. So really want these contracts to work pretty quick. It's more or less a lotto for me. So just watching for that. NNDM, a chip name that we haven't really traded in quite a while. I know there's some people in the room that have traded it, but essentially it's just a chip name that's looking like it's getting really good strength here. I'm looking at picking up potential leaps in this name. Now they do like radio waves, stuff like that, but you can almost see the chart being trending upwards. Just had a breakout range, broke out of this range, out of this sub 10 level. Really strong day on Wednesday, then consolidation on Thursday, Friday. I'm looking for this name to continue higher. BKNG, Expedia, we've kind of spoke about those names. Watching the travel stocks of the travel bans get lifted. Had an ugly day on Friday, but it did stop right about a consolidation range, right at this volume bar around the 2100 level. Looking for a bounce here, and then maybe an entry into some leaps at around 2125 probably would be a good entry. Actually, I would actually want to see this sell bar get taken out. So raise that up to a 2180. That would confirm a reversal. Honestly, if BKNG does reverse, then we'd have this retest of 2300, probably by about 5 or 6 months out, just to give it some time. But I do want to see signs of a confirmation reversal there. Let's see, Expedia would be a sister stock to trade. I've never traded Expedia really, but we have spoken about it, sister stocks before in the past. Really tight consolidation, didn't sell off as bad as BKNG, flirting right around that all-time high range. Let's see here, we got about 145. So through 145, especially with the travel ban news that came over the weekend, I should see this name gap up and run with a little bit of strength. Another good name that if you wanted to play leaps in, and you really could. And this is just one of those sympathy plays for the travel ban. For if vaccine news gets better, these are the stocks that really should do well. Another, if the news doesn't progress or doesn't get better, especially in the UK, you could watch for Roku to continue its strength. And as we've seen lately, Roku hasn't been running with the stay-at-homes like Zoom. This is why I would like to trade Roku here. Looking for a clean breakthrough of Roku to get out of the 420 area. Now the contracts are kind of pricey for Roku, so just got to be mindful of that. We do have a shortened week this week, but Roku, I would say that if I was going to play a stay-home stock, it'd be Roku. Another name that possibly shows a sign of a reversal has been Zoom. The only thing that scares me with Zoom is anytime we've had pops, they have gotten sold off. This is almost really do or die time for Zoom. As I pull up the chart here and draw this trend line, you see that that's more or less the trend. Now you could argue and say that the trend has been broken, but I want to have reassurance. So for me on Zoom, I would like to get above this 410 level. 412 would be a good entry for contracts or shares for me. So that's something that's going to be able to watch. I mean, if the vaccine news gets better, probably going to see this get sold off again. That being said, for Kathy Wood fanatics, she has been acquiring quite a bit of this. So we'll be watching. And then just a couple more names. Watching GRWG, I unfortunately missed my entry on this pot stock for Leaps. I do have shares, but there has been a really nice tight, pull up the 4 hour, really tight consolidation. I would want to get long or enter more contracts through this 53 level. I feel like it's been riding this trend line up. So 53 would put it literally right around here. That would be the ideal setup for us to see a next leg higher. With the Biden administration coming in, should see a pop or a run in these pot stocks, your TLRYs, your GRWGs, a few others that I can't think of off the top of my head. But I do like GRWG. I got to thank JD for putting me on it. And then lastly, I am going to purchase a few shares of Ozon, similar type play to Jumio. Very nice breakout on Friday, kind of recapturing the sell-off that it had around that 52 level. But I am going to enter this position with shares only. I feel like it's kind of difficult being in a position where, especially in leaps and contracts where overseas with Russia might not go very well. So that's something that I'm keeping my eye on. But that's about it for my stocks to watch for this upcoming week. Something that I kind of want to discuss with you guys is these the idea of SPACs. Now, let me see if I can make this a little bit larger. What a SPAC really is, I'll just pull it up. It's known as a blank check company. These groups, Chamath, the IPOs. What SPAC means is a special purpose acquisition company. They're known as blank check companies. Basically, a group of leaders come together, want to merge with a company, so they're a publicly traded company who wants to go out and merge with another sector or another company in that sector. For example, Virgin Galactic Holdings, SPCE, used to be a SPAC. All the Chamath IPOs, those are all SPACs, and they go out and merge with certain companies. Now, their job as a SPAC is essentially just to raise capital. That's why they're known as a blank check company. So the better the leaders, the more the investors will trust these leaders to go out and find this merging company. What a lot of people don't really know with SPACs, and I'm going to share my screen with you guys one more time. Oops, sorry guys. What a lot of people don't know about SPACs is that most SPACs have a floor. And we kind of have had Anthony come in and discuss that with us, where, for example, Skills used to be a SPAC, or let's see if we can look at IPOE, a great SPAC here. This is a Chamath stock. They have floors. So whenever a company joins into the SPAC force, they essentially are above $10. And that's because that they are usually given 2 years um, to join this merger at the moment that they come out onto a public traded platform. They're given about 2 years to merge. So the board says, all right, from this date, you have, you know, 2 years to go out and find a company that you want to merge with. Otherwise, we got to take you off. And they come in listed above $10. If in that time where the company doesn't find a merger, they will drop to 10, and then the initial investment will be given back to the investors because all the assets are essentially worthless. So the best, really, the strategy for SPACs is, as Kevin O'Leary said, what you want from a SPAC is that you want to find a jockey and a horse. The jockey being the team that assembles the SPAC. So Chamath, for example, if Cathie Wood came out with a SPAC, people would be all over it. You're looking for people that are leading in their sectors to be ahead of the SPAC. And then the SPAC itself. For example, IPOE, you have Chamath leading it. One of the ones that I wanted to talk about was FGNA, which is a financial. TIGR. But looking at FGNA, they're a fintech SPAC. So they're looking to go out and look at somebody with financial in the EV side of things. Now, this is the name that I've actually jumped into and looked. Let me pull up my notes here. And you guys have heard me talk about the jockey and the horse. Well, FGNA is a fintech, so they're similar to, as you guys heard, that Chamath just merged with Sophie, which is another fintech. TIGR fintech. So people have been riding this fintech wave where these stocks have actually done really well. They have found potential to merge. For example, FGNA, their CEO or founder is Joe Maglia. He used to be a Merrill Lynch #1 producer. So in that banking industry, this is what investors are going to be looking for. And also ex-chairman of TD Ameritrade. So whenever investors see that, they're going to see that as a bullish, if you will, example. If the stock is opening up around $10, well, if that's my ceiling, so 9.78, if that's my floor, there's a great risk reward for the stock if it's at $10, where I can risk 10% max loss. Say I got in at 11, I'm risking 10% for it to go back down to 10 and me to get my money back, or I see tremendous upside, which I do in the company, and can see the stock, at 20, 30, 40 in the next coming few months. That's a good risk reward for myself, and that's why I'm going to be jumping into it. Another SPAC that I'm going to be watching out in the fintech world, Ajax. CEOs in the same boat as the fintech. SNPR, Tortoise Acquisition Corp. I have a little note saying thank you there. A name that I pointed out in my chat room, has a really good breakout here. Tortoise Acquisition Group. Also, if you knew Shell, I believe that they just had a merger, but Shell was another Tortoise Acquisition Group that just recently merged. So this is something that I'm looking for in the SPAC game, is these companies that are continuing to go out and find new deals, new mergers, and being successful. So for example, as SNPR, $12, I'm okay with the floor being around that 10 level. So risking 3 points in order to make 40 points, and then I believe I have one more. Oh, it's APSG, which is one that I have actually not looked too much into, but we'll continue to do that. I just like the chart setup. I think if it breaks through 11, it's going to continue to go higher. Discussing SPACs and how they have a floor and how we're in this kind of a SPAC bubble where SPACs are continuing to do well. I think that SPACs are going to be the new IPO, for example. Instead of companies blindly putting their name on a publicly traded stock market, companies are going to be looking more for these SPACs to merge with them where they already have these investors and these value assets into them. I think that IPOs are eventually going to die down and SPACs won't die down. That's why I think that's why Anthony has had such a great year, because he was one of the first to realize this. Chamath, I believe if you invested with Chamath, you're up over 60% on the year, potentially way higher than that. That could be way off, but I know that you are up tremendously on the year. I mean, for example, if I would have bought IPOE at 10 and it pushed to 22, I'm up way over 100%. That's just an example. Looking at now, something that I want to discuss within SPACs are warrants. Warrants are basically options for these SPAC names. And the thing about warrants, if I pull up FGNA warrants, /WS, what warrants allow investors to do is like an option, is that if a stock passes this certain price by a certain date, then I have the right to purchase that stock at that price. Not that I don't need the obligation to do it, but I do have the right to. What they do is that they basically allow you to leverage. So if I pull up the charts here of FGNA and FGNA warrants, FGNA warrants are on the left, FGNA are on the right. Actually, let's do laser. Laser warrants. Perfect. So you guys can see my screen here. Okay, so on the left is the company named Laser, which was a SPAC, and then on the right is the warrants form. So what a warrant basically does is it allows you to leverage for these SPACs. Basically saying that if I buy these warrants, I pay this premium like an option contract for this stock. If we pass that break even price, then you can exercise your warrants. And many warrants have different ratios with them, where if I buy one warrant, I get one asset of the stock or one stock. Some of them can be like 5 to 1, where I buy one warrant, I get five stocks, for example. Most of the time, they're going to be a 1-to-1 ratio. What's great about these warrants is I can leverage myself. So instead of buying whenever the stock's at 10, I could have bought these warrants for 65 cents. Now, what happens is that, for example, if I had a stock that was at $10 a SPAC, and then I bought warrants that were at $2, so this is how you calculate your risk, or your profit, excuse me, is that if the SPAC went from 10 to 20, I would have doubled my money, correct? Okay. But if the warrants and the SPAC itself, I add those two numbers together. So I do 10 plus 2. That is 12. If the stock went to 20, I subtract 20 minus 12, and those warrants are worth 8 each. So from 2 to 8, I would have had 400%. That's just kind of a easy way, or 400%, excuse me. That's just kind of an easy way to know that I can leverage myself a lot smaller size position and maximize better profits. And that's essentially what the use of these warrants are for. Now, something that some rules that these warrants have is you have to pay, or excuse me, they typically are up to 5 years to exercise. Now, you can't exercise these warrants until a merger is made, meaning that if, Laser merges with a company, and they're going to change their ticker symbol and everything, I can exercise it then. But if it doesn't, then I can't exercise them. That doesn't mean that I can't sell out of my warrants. That just means that I can't purchase the stock itself, or exercise them. You do pay a premium, especially for selling these. It's like $38 to sell your group of warrants. Warrants are great for leveraging stocks. So instead of buying, if a stock's at 10 and I wanted to buy $1,000, well, now, for example, if a warrant was trading at $1, I could buy 1,000 warrants. Okay. So you typically do warrants in companies that you're very bullish on. For example, this FGNA that I'm very bullish about. The stock's trading around $11, but the warrants are trading around, I believe, 1.75. Okay. So I would, if I'm really bullish on FGNA, I believe the stock's going to do really well, and I'm not risking too much. This is very similar to stock trading or option trading, where if I invest $200 into an option and this never merges, the warrants expires worthless, I lose $200. Now, if these warrants take off and go to 20, I make all that money. But they do have a delta, which is similar to option trading. The delta decreases as the stock moves further away from 10. And then they have depending on the stock itself, if the stock is above 18, so above $18 a stock, for 20 out of 30 days, then the company can then pull out their warrants, and then you have a certain time frame to sell those warrants, otherwise they expire as worthless. That's something kind of to note and be careful about. But typically, if a stock's going to go to 18, my warrants are going to be, double or triple. I should probably sell out of them anyways, just depending on, of course, account management. That's kind of warrants in a nutshell. There's a little bit more to that. I need to dive in a little bit longer into warrants. But I feel like this is a good risk reward, especially if I'm looking at a company and they have a floor where they have good upside potential. Their downside, is very minimal. Why not leverage myself into these warrants where I can maximize my profits instead of just buying the stock? Let me see if you guys remember Churchill, CCIV. This is the stock. If we pull up the warrant, CCIV, and then I believe it's /WS. Churchill had warrants going out for, before they popped, 145. The SPAC itself was trading at around $10. The stock pops to 21. If I owned the SPAC, I doubled my money. If I owned the warrants, I multiplied it times 9. Okay, so really good upside potential to warrants, especially if you're managing your account. I believe that they are potentially a little bit safer than trading options themselves, just because I only have to be right about one thing, and that's the direction of the stock. With options, you got to be right about the time as well. Here with warrants, you're given ample of time, so you can be you have a greater risk reward, in my opinion. So really going to be looking at warrants. Like I said, I am going to jump into FG&A warrants tomorrow morning. So pay $1.75 for those, or $1.09 in the aftermarket. Buy $400 or $500 just for those, and kind of try out the warrants, see what I like, what I don't like about them. And that's basically what I have for the warrants. I just know that if you're bullish stacks, then you should be bullish warrants, as they correlate hand in hand with each other. And then something that I kind of want to dive into, but don't want to overwhelm everybody. I may make a separate video, is the talk about spreads, especially with earnings season coming up. Now we have had this discussion before, but with spreads, let's look at Tesla, for example. Say I'm bullish on Tesla and I'm looking at the contracts. Maybe if I don't have dial-up internet. Um, with these Tesla contracts, I can, for example, instead of just buying a call option because I'm bullish Tesla, I could do different things in order for me to, um, you know, lower my risk, but still make sure that I'm gaining some profit. One thing that I could do is I could sell spreads. Um, so I could sell a put spread. And the way that works would be I would, okay, so whenever you sell a spread, I believe that you are buying, or excuse me, you're selling the closest expiration that you want and then buying the one below it. So I would sell the 815 and buy the 810. Um, Now, what would happen if the stock went all the way to, for example, 900 this week? My 810 contract would expire worthless and I would lose $20. But then I sold the 815 and that saw me selling it to somebody else, meaning they bought it, and that contract expired worthless to them. I would be profiting the difference in these two. So 2013, 22.19, I would make $2.06. This is a great way to maybe capitalize on the high premium. If a stock breaks through a number, you can sell these spreads and profit a little bit. And this is one way that I recommend small accounts to grow, is by maybe potentially selling spreads, just because, for example, if every day I woke up and sold SPX spreads, you guys, as we've been through this V-shaped recovery, SPX has been on a tear. So me selling put spreads would actually make a logical sense, and I could actually make good passive income doing that. Now, there are some days where SPX kind of dumps a little bit and you'd have to manage your account, but for the most part, you would have consecutive green days because you're just selling put spreads. Another way that I could do this is if I was trading Zoom, for example, and I was bullish as Zoom, I could sell the or buy the 400s and then sell like the 430s. Now, if I thought that Zoom was going to close somewhere around this 415 area, if I had the 400s, I would profit, whatever 15 points out the money is at the expiration. And then if I sold the 430s, I would also profit the $4 that those contracts are. So I would actually make somewhere around $19 total. Now, the only time that you run into a problem is typically whenever you, for example, if I buy the 400s and then I sell the 430s and the stock takes up the 450, what would happen is that my 400s, I would be, 50 points green on just because they're 50 points out the money. The 430s, I would lose 20 of that because the stock is 20 points out of the money from the 430s. So my net profit would be 30. Really a good, safe way to profit money. But at the same time, that if the stock goes to 400 or doesn't go to 400, then I would lose the premium for that contract. So there's different tactics into selling spreads, buying spreads. You just got to find out which way is the right way for you. If you guys follow Lumina Options, he's not posting a lot right now just because he's busy, but he does have great examples of spread